What's up, everybody? Welcome to today's episode of the Indy Investor Pod. We have Gloria Gear, our resident real estate agent here on the podcast. She is the leader of the Gear Real Estate Group. Gloria, how you doing?
I'm doing awesome. Just living the dream and just trying to keep up, honestly, really right now.
Yes, it's been it's a little bit busy around the town, hasn't it?
Yeah, it really has been. So excited to kind of jump in today and just look at the market snap and see what's going on, what the numbers are telling us, and how that'll kind of help all of our investors.
Yeah, absolutely. I'll give you the opportunity here to go ahead and get the screen shared for anyone who wants to watch the video. Anyone listening can listen along. But yeah, today we will go ahead and kind of give our quarterly update. So we did first quarter and second quarter. And now we're at the end of third quarter and then heading into the end of the year. So, Gloria and myself will go ahead and kind of run through what's been happening in Indy, what we're seeing, kind of what we're feeling like is going on around the different areas and kind of how we see the year rounding out. So, Gloria, looks like you're ready to rock and roll. So, I'll go ahead and let you get started here.
Yep. So I have my stats pulled up here, but first of all, I want to say I don't know, was it about middle of August? I was on a phone call with you. I'm like, Randy, there's just something weird going on. What's going on? It's different. Yep. It's changing. So a lot of what I've got up here today is I pulled it up and I just kind of have it here. I kind of want to self-discover a little bit with you, just to kind of see what we're kind of seeing trending here in quarter three. And first of all, I want to say, everybody keeps asking, when's the market going to crash? When are we going to hit that bubble? We're not going to. It's not going to, but we're seeing a little bit of stuff going on here. So like, if you look here at the bottom of my screen, look at that little chart there. We're like gradually going up, and it kind of dips a little bit with the seasons. And you can kind of see June, July, we kind of hit the top there, and we're just starting slowly to kind of peak a little bit. So for me, I feel like it's
real quick on this dip here for people who can't see, what's that date roughly?
So we kind of like, so if it goes all the way from August of 2018 to 2021 of August. So back, this is median sales price. So back in August of 2018, we were right about 150. And then it just kind of gradually curves and gradually goes up. Whereas our peak kind of was June of 2021 at close to 225 was our median. And July was about even with that. And then August is showing just a slight dip. So if we look at our median sales price up there in the middle of this chart, median sales price is 215,000. And that's down 4% from last month. So just slightly, it's not like we're diving, but I mean, it's just slightly kind of a little bit of a correction. This particular chart is month over month. And I actually have one at the end that we can do year over year and quarter over quarter. So this is August stats. So we're looking at July to August stats. Yes, we're at the end of September, but those kind of come out delayed afterwards. So that's kind of where we're looking at that. Units sold, and this is Marion County. And if you look at the top there, it's all townships. So it's the center of downtown Indianapolis plus all of the donut townships all the way around. So 1,464 units sold, down about 1.5%. Active inventory is 1,148, and we actually were flat from last month. Average days on market is only 17. So that means we only have a half month of inventory. With what people are wanting to buy, we only have about a little over 2 weeks worth of inventory on the market. New listings are down again. So again, we still have an inventory problem at 1,647. And then sold price per square foot is down 2.7% at 139. So that's all of Marion County. And then I like to go into, and my things aren't switching here. I did have this all set up. See if we can refresh this a little bit. So what I'm doing next is I'm going to show you what just the center townships is. So let me kind of reset this up here. So center township is basically the middle of downtown Indianapolis, where a lot of our investors do most of their investing. So if we look just at center township, then our median sales price is 150,000, which that's kind of right. People want to be right around that price point, a little bit lower. It has dropped 11.8% from July to August.
Mhm.
285 units sold in that price range at 5.9%. Active inventory is up just slightly at 548, so it's up 6.4%. Average days on market in the middle of downtown is 44 days, and that's actually up 25%. So that's showing us a little bit of a shift. I did talk to one agent that mainly deals in the downtown market. And basically what's still happening is a lot of our professional people are still not coming back downtown to work. So even 18 months, 24 months after COVID, a lot of these buildings are finding out, a lot of these companies are finding out that they don't need all the building space. They're kind of doing a model where it's half at home, work from home, half come into buildings.
Yeah.
Like for instance, my husband's work, they're only going in 2 days a week, or they only come in on days when they have meetings scheduled. So that's kind of affecting that a little bit. So I don't know, are you seeing that too, Randy?
Yeah, no, I definitely see that. And so Center Township is like you had all of them checked there. So and someone might have noted that Center Township's average or median sales price is higher than Marion County's median. So there's different pockets and within Center that there's high end stuff, and then there's also low end. So it all kind of equals itself out. But that's why it tends to be a higher median sales price. But like in regards to what you're talking about with people like homeowners and people that work downtown, not really going in, not having to live close to downtown. Yeah, I definitely think that has a big part to do with that.
So listings are up a little bit. So again, I think that's a good thing for our investors, only up 2.7%, but we'll take whatever we can. So there's about 387 new listings this month. Sold price per square foot is down 7.6%. Another good sign for investors. We're at about $126 per square foot. So like when you're running your numbers, you can kind of use some of these stats to do it. So look at my chart at the bottom there. We actually are seeing even a little bit more of a dip. Kind of looks like our peak was about May, and it's starting to gradually go down. Now you can kind of see there's always just a little bit of a dip seasonally that our high is May, June, July. We're starting to kind of see that seasonal dip. We're definitely higher than we were before, but we're being able to breathe right now. So like in May and June, I was like coming up against 20 to 40 other offers. And so now it's like, if I get a rejection, it might be I was up against 10 other offers, or I was in the top 3. I know like in May, I wrote 31 offers and I only went 3. So I was at 10% now. Now my kind of average of winning offers is about 25 to 30%. So still competition there, but it's kind of easing up a little bit. So are you seeing that as well on the wholesaling side?
Yeah, I mean, it's just even on the acquisitions, not necessarily just the sales on the wholesaling side, but even on acquisitions, June and July, just like the retail side, like things were crazy, right? And we're getting deals left and right. And then August, even the seller pool even kind of cooled off a little bit. Is for at least off market, for us trying to get anything at a discount. And mainly because that's kind of just a transitional part of the year for a lot of people who have kids, even, going back to school and things like that. But from the funny thing is, from what we heard on the phones, is that a lot of people were, they're wanting top dollar because that's what they all heard from February up to July. Right. And then people that had homes that needed a lot of work were just tired of getting low, like what they thought were low ball offers because their neighbor's house sold for $30,000 more. Well, that they just look at numbers and not realizing that their neighbor's house was all finished and retail ready. So we did see a dip in that aspect in August, and then things started picking up here in September. So yeah, we did see some similar things there in the wholesale side.
So real quick, I like to kind of do the outskirts of Marion County just for our investors that like to see those numbers too. So Hendricks County out here on the west side, median sales 282,000, dipped a little bit, 2.5%. Listings are down 5%, only 352 out here. New listings, average days on market's 10. So you can see that's a lot different than the 44 days in the middle of downtown. Looking at that chart, again, a much more steady up growth here. A little slight downturn right at the end in August there for fourth quarter. Hamilton County, average sales price is $365,000. Again, new listings are down, active inventory is down, average day on market is only 16 days. And same thing, very steady kind of upswing there, a little bit of curve right at the end of August here. So again, I don't think it's a correction. It's just we're stabilizing a little bit. Johnson County down. Go ahead.
Just real quick, I just think it's funny, like looking at these stats, like the average days on market for Hendrix was 14, and it said like that was up 14%. Like that blows my mind.
Because stuff's going in like 2 or 3 days,
Yeah.
So the fact that it's sitting on the market now for a week, that may mean that they tried to price it at the top of what it was supposed to be. So it's kind of sitting there a little bit now. Yeah. Johnson County. Whoops. Where'd we go, Johnson County? I had you. Lost Johnson County. Let me just redo it real quick here. There we go. So average is 285. Something I noticed down there is no drop yet. We're still kind of continuing to go up. 10 days average on the market. And again, that's up 10%, like you said on the others. So we're just still kind of experiencing a really low inventory all around. So
yeah.
So any comments on the outskirts? I know you do a little bit, and you've been starting to pick up a few things on the wholesaling side out in these outskirting counties.
Yeah. You mentioned that, in that last slide, you showed Johnson County, and that really hasn't changed for like the retail side of things. And I think all around, like outside the loop in those suburb type communities, nothing's really changed on the wholesale side either. Like those prices are still going up. And I see people buying deals from us, a lot of hedge fund buyers, they've ramped up again, institutional buyers, and they're paying more sometimes than a homeowner would pay for a home. So that definitely will push prices in all those areas. So outside the loop, those cookie cutter neighborhoods, subdivisions, those are still staying hot. So we still see the same thing on our end. And we're trying to focus a lot of our activity there now because we know like nothing's changed. So it's still a very hot area. But yeah, it's just the prices that people are paying continue to blow my mind.
Yep. Yeah. And again, I mean, those corporate buyers, even on the retail side, are paying $20,000 over what list price is. Yeah. So, it's because if you compare this to the rest of the country, the prices are still a bargain for some of those corporate buyers. So
what would you like, any clients that you have that maybe that's where their target areas, and maybe they're having trouble wrapping their head around some of these prices. I mean, what would you kind of tell them to consider, like with the activity going on?
I still have some that just want to stay there because they have kind of a multi-strategy where they're not only cash flowing, they want to see that equity too. So, and I've mentioned this a couple of times, but my own personal house, I live out here on the west side in Hendricks County. I bought it for 180,000 and it's worth 325 right now as is. Yeah. If I put a little bit of work into it, it'd be worth 350. And that's just over the course of 9 years. Yeah. So like, if you're thinking those kind of terms where you're looking at both cash flow and equity building, I think it's still a good play for you. Know that rents still have not caught up. If you're a buy and hold person, rents have not caught up to the prices yet. They are starting to creep up, but still like a $250,000 house is going to rent for like $1,500 to $1,700. So we're not at that 1%. But again, I mean, if you compare, like I had one guy that said in California, he's got a $400,000 house and it's only renting for $2,000. So, if you're closer there, you've got kind of, low cost, low CapEx and maintenance. It might not be bad for some people.
Also like long-term tenants, like people rent there for 5 years without a change in tenants. So that's good. And yeah, people are buying out there on the investor side from us. It's just for the appreciation game. That's all it is, because they know it's solid. And if things are up, they're going to start there first, right?
Yep.
So that's what I've been seeing too.
Sometimes, and some of my investors are like, you know what, I still need to get my 1%. So let's pivot. Right. Let's look at some other neighborhoods. And there's plenty of neighborhoods out there in Indianapolis. So, so this chart then, what I kind of like doing is messing around with this a little bit. So what I've set this back up for is Marion County again. I do have all the townships, so you can kind of see where my filters are there. So the our first one is number of closed sales. So in 2021, and this is kind of year to date right now, take a second to refresh. Sorry about that. So what this is doing is this is comparing January to August of 2020 to January of August of 2021, which obviously we were in COVID last year. So these numbers may be a little bit skewed. Sorry. Of course, this decides like right as soon as I start to pull this slide up that we're going to kind of.
No, it's all good.
Space out for here for a little bit. Got a little song and dance for us, Randy, while we're getting this to load.
I think we lose viewers.
Yeah. Okay. So in this, you can see, I mean, even as it's still loading, we're always seasonal too. So 2021 in Marion County saw 27,343 houses sold. Okay. That's up 7% from last year. So right now I have year to date and I have by year. Okay. When we look at quarter, and this is just, I kind of like looking at just these charts and seeing what's happening. So again, you always see that, you know, quarter one, quarter two, quarter three, and then quarter four is down again because we're in winter in Indiana. And then we got quarter one, quarter two, quarter three are high, down again in quarter one. Okay. So year over year, we're up 46% from where we were, you know, and that's showing just quarter two is what that has so far. So then by month, again, you can kind of see the seasonal, how it ebbs and flows. So you can see how we're peaked and we're going to start coming down. This is following the trends all the way. Yeah. Then if we go median sales price.
Real quick, Gloria, I think you stopped the share.
So sorry.
No, you're fine.
Let's get back in there. Just hit a button there. Okay, you got me back?
Yep.
Okay, so this is month. Again, we're looking at Marion County median sales price. Wow, look at that climb.
Yeah.
So this is from crazy. 2016 to the climb. So, and even like month over month, we're up 11% of where we were August of last year. So that's kind of where we are there. Year over year, see if that'll kind of do. See, nice straight, just zooming right up.
Yeah.
By quarter, we can kind of see our seasonal again. Sorry, this is like loading so slow. There we go. But again, still nice climb. So like if you look here, so from where we were, we're up 15.6% since last year in Marion County. Sold price per square foot. This is just kind of another one when our investors are kind of looking at running their numbers and figuring out stuff. It's just a good base way to do it because sometimes it's just, some houses are just hard to comp out. So if you're just having trouble finding that exact bedroom and bathroom, look at what the square footage is. So looks like we're right about $144 a square foot right now. And that's up 17.4% since last year. So a lot of good growth happening here. Percentage of list price received. I like looking at this one because a lot of my guys are coming in and like, I want to offer 20% under. Well, you're not going to get it right now.
That's not gonna work today.
No. So, but again, we're seeing just a little bit of, you know, a correction, I think that's going to happen. So we're still though up 3.3% from last year. We're at 98%. We're at 100%. So there is kind of a strategy with real estate agents though, that you kind of got to play the game of, are they pricing it too high just to kind of see if they can get it? Are they pricing it really low to see if there's a, you know, they can get a bidding war started. Yeah. At the same time, that also makes it really hard for you to comp out some stuff sometimes. So again, you can see here, we're steady, and then we just jumped again, you know, and again, this is quarter two. This is the end of quarter two numbers. So we'll see next month, some more of those numbers come out, but a month over month even, looks like just a little bit. So we went from 101.5 to 101, but we're still, you know, over list price. And what that means is that sellers know that, and they're not going to accept less than what their realtors told them they can do. So I know that translates to the wholesale side too. So what are you looking for on the wholesale side of what sellers are wanting to get for their houses?
Yeah, kind of like what I mentioned earlier. Initially, a lot of times, again, this is just going off of what they're asking versus the condition of their house. And sometimes they're like, hey, like they're calling us because they want to sell their house for cash, right? Everyone wants to sell their house for cash. We're not the right buyer. Like they want a fair price, but they got to put that on the market. That's where
Mhm.
that buyer is going to come from. And then on the flip side, someone who wants that cash offer, but they want the retail price, but their home, is in need of repair. So, when we're in that case, we have to pull those cash sale comps and run it line by line with them, and then compare and get them to agree, like, hey, like, are you seeing what I'm seeing? Your house looks like this one that sold for $20,000 less than the one that was retail ready. And get them get them in the right zone of where they should sell. But it's tough because I mean we've been battling that since last year, but this
Mhm.
year I mean everyone's like, according to the charts everything has gone up, so it just gets harder and harder on our end, but it's okay. I mean, a seller shouldn't, if they don't have to, they shouldn't, take any less than what they can get. Right. So,
Right.
I don't
Well,
blame any of them for trying to get as much as they can.
right. And at the same time, though, I mean, that's one of the things I really appreciate about the simple wholesaling side is that you give them your options. I know some wholesalers that are not as ethical and have as much integrity as the simple guys don't always do that, but you're really giving them their options of, okay, here's your options. You can get it for cash. You don't have to fix up anything. If you want to go retail, yes, you're going to get more money, but it's going to cost you this much more money to do it, and you
Yeah.
kind of lay out those options for them and give them a fair chance of exactly figuring out what works best for them. So
Yeah.
I think that's really something that Simple does well.
Yeah, we try to let them know as soon as possible, just so they don't waste their time.
Right.
Trying to talk to us and trying to convince us to buy their house. We can initially, like, usually find out if when they fall into that category within like the first 5 minutes of a phone call. Once they start telling us what they want for their house, and it's usually like along the lines of based on, hey, my neighbor's house sold for this, and I know homes in my neighborhood are selling for X amount.
Mhm.
That's what I'm looking for.
Yep.
That's typically the sound of a retail seller.
Yeah.
So,
Yep.
and that's
And
okay.
we can help them. That's
And that's,
another
yep,
reason why
yep,
why you brought me on, is that we can help those sellers too. So
yeah.
um so cumulative days on market, this kind of is like, if I look at August, when you look from the same period last year, and I thought, coming out of COVID, we were just crazy that summer, but it was still 29 days on the market. We're only 17 days on the market here. So we're like 42% less than what we were last year. And then same kind of numbers on the quarter there, that it's just, we dive. So again, the answer is inventory. We just have to have more houses out there. So
Yeah.
yep, that's just kind of what I was just looking at this one. Yeah, you can see over the year, it's just crashed. So 50%. So like last year, we were still at 40 days, even with all the issues with COVID. This year, our average is 20 days on the market. So
Yeah.
just kind of crazy. So
So I guess since we're kind of nearing towards the end of the episode, so we're going into quarter four. Like, when people ask you, Gloria, when's the market just gonna crash? A lot of people tell me crash. I hate that word because it's not gonna crash.
yeah,
But
no.
when we gonna stop the craziness? When's it gonna dip down below what we're at now? Like, what's that conversation with your clients that you're having who ask you that?
So basically, again, not going to crash. We're not hitting a bubble. We're
Totally,
so
it's a
low on
totally
inventory.
different thing that
Yeah,
happened years ago.
yeah, yes, exactly. And the same time now is we still have such low inventory. So when the crash happened in 2008, 2009, builders stopped building. So here we are, like almost 20 years after that. And there's like there's hardly any of those starter homes.
Yeah.
And then same time when we had the backup from COVID, backup from lumber, backup from different things, then what's happened is that the builders on the top end are not being able to keep up. So that means that it kind of filters all the way down, that the medium-sized people can't move up, the starter people can't move up, people coming from apartments can't find places to do. So inventory problem. So for my investors though, Indiana typically kind of slows down a little bit for homeowners in the fall and the winter. They're
Yeah.
already in their schools, they're already settled, they don't want to move. We're getting into winter, we're getting into holidays. So I think that opens it up for investors. That's prime time for them doing it. If they pick up houses now that have to do a little bit of renovation, they've got a month or two that they can do those renovations in. And then typically too, do want to say that with tenants, typically November, December, and January are the hardest month for property managers. What they tell me is that in February, when the tax refund checks start coming in, then people have their security deposits and they're ready to start again. So if you can find a house now and have it ready by the end of January, you're good to go for the spring season. One other thing, I had a conversation with a property manager last week as far as seasonality, and she says, I think it's really going to be different this year because the eviction moratorium just ended. She's taking people to court. People are moving around. She's like, I have a waiting list. So the same kind of inventory problem that we have in sales, they have that in the property management side as well. So all of these, they have this waiting list of tenants that want to move into houses. As soon as you guys can get these ready and get them open for the property managers, more than likely they've got someone to move in there. So I really think as far as that side, it's not going to be as seasonal this year as normal. But overall, I really think that now's the time to start looking. Even just this weekend, ton of stuff has just popped up on the market that maybe people were working on over the summer and they decide, you know what, now's the time, let's get it in real quick before winter hits. I think it's prime picking for like the investors right now to get out there and find some bargains. And like I said, if it's been sitting there over the summer, you know, if that house is sitting at 30 days or more than likely you can do some negotiations. So now's the time for you guys that like to do that negotiation and get a bargain, you know, now's the time that you can do that. So I really feel like this quarter coming up is going to be really good for our investors.
Yeah, I think it's going to be great for all buyers, your buyers, retail buyers, wholesale buyers, because, you know, like you said, when things slow down from October through December and into January, those motivated sellers get a little extra motivated, because they can feel that things that kind of slow down and things get cold and it just doesn't feel like a very seller friendly time, even though the numbers it still is. But you know, people in Indiana tend to get a little bit more motivated in the winter. So I think everyone buying homes will find a little bit more opportunity than they'd had in the previous years. And one thing I want to point out, and I don't even know if this year is going to be anything like it because it's kind of been a weird year, but when I was a full-time agent, I would always, October 1st was like National Expired Listing Day. I don't know, and that's tomorrow. So I always check the BLC. There's always like 200 plus expired listings on October 1st. I don't know if this year is going to be like that just because the market's been so hot, but keep an eye on that tomorrow. When you log in the first thing in the morning, see how many expired listings are. I'd be curious to see if it's still like that. And that's opportunity there for your buyers too. You can contact them and say, hey, I've got a cash buyer ready to go. I see your home did not sell. And maybe they're giving up until next year. Well, we can get it done still. So I'd keep an eye on that.
That's an interesting stat. So, okay, everybody, I'm going to log in tomorrow morning. I'm going to post it on my Facebook page. So that's on my gear group Facebook page. Everybody log in. I'm going to check to see. So Randy says 200. So we'll see if he's right.
We'll see. So I'll see what COVID does to that stat, but I know that every other year is always that. So, all right, well, that's going to be the end of today's episode of the Q3 update. Really excited to roll into Q4. As Gloria and I stated, you know, we anticipate things to stay hot, stay very warm, even throughout the cold months here in Indiana. So everyone that's investing here, you know, keep on doing your thing. Things aren't going anywhere. There's still gonna be a lot of action going on. But with that will wrap up today's episode. We'll see you later.
Thanks. Have a great day, everybody.